In 2002, when most people thought the space industry was a graveyard for dreams and money, one man quietly wired his remaining fortune into a small startup that many experts believed would fail. Elon Musk was not trying to build a company, he was trying to prove a point. At the time, Musk had already sold Zip2 and PayPal. He was rich, famous, and could have disappeared into a life of comfort. Instead, he became obsessed with a single question that haunted him during a flight to Russia. Why had the cost of going to space barely changed in half a century? Rockets were still being thrown away like disposable lighters. Launch costs were so high that space had become the exclusive playground of governments, not entrepreneurs. Musk believed this was not a law of physics, but a failure of imagination. So he founded SpaceX with a goal that sounded insane even by Silicon Valley standards: dramatically reduce the cost of spaceflight and make humanity a multi-planet species. In the early days, SpaceX did not look like the future. It looked like a gamble on the edge of collapse. The first employees were young, overworked, underpaid, and driven by a sense that they were part of something bigger than themselves. Musk personally reviewed designs, challenged engineers, and pushed timelines that veterans of the aerospace industry said were impossible. The Falcon 1 rocket failed 3 times in a row. Each failure burned millions of dollars. Each failure brought SpaceX closer to bankruptcy. After the third failed launch, Musk later admitted the company had enough money for only one more attempt. That fourth launch worked. In September 2008, Falcon 1 reached orbit. Just weeks later, NASA awarded SpaceX a major resupply contract for the International Space Station. Overnight, SpaceX went from a nearly dead startup to a legitimate aerospace company. But survival was only the beginning. The real revolution started when SpaceX challenged the most sacred assumption in spaceflight: that rockets must be expendable. Instead of accepting waste as inevitable, SpaceX asked a simple question: what if rockets could land themselves and fly again? The idea was mocked. Industry veterans said it was too complex, too dangerous, too expensive. Then SpaceX did it anyway. In 2015, a Falcon 9 booster returned from space and landed vertically on Earth. A year later, another landed on a floating drone ship in the ocean. These were not stunts. They were proof that rockets could be reused again and again. This single innovation changed the economics of space. Launch costs fell dramatically. What once cost hundreds of millions of dollars could now be done for a fraction of the price. SpaceX began winning contracts not because it was subsidized, but because it was simply better and cheaper. At the same time, SpaceX was quietly building something even more ambitious: Starlink. While the world focused on rockets, SpaceX started deploying thousands of satellites into low Earth orbit. The goal was global, high-speed internet with low latency, accessible anywhere on the planet. This was not just a side project. Starlink transformed SpaceX from a launch company into a vertically integrated space infrastructure company. SpaceX now controlled the rockets, the satellites, the launch cadence, and the customer relationship. That is the core of SpaceX's business model. Most aerospace companies sell hardware. SpaceX sells access. Access to orbit, access to data, access to global connectivity, access to the future space economy. Launch services remain a major revenue stream, with commercial customers, governments, and NASA paying SpaceX to put payloads into space. But the margins here are structurally different from competitors because SpaceX reuses rockets and produces many components in-house. Starlink is where the business becomes transformative. Unlike traditional satellite operators that rely on a small number of expensive satellites, Starlink uses a dense network of relatively low-cost units, constantly refreshed and improved. The result is a recurring revenue model with global reach. This is why SpaceX's valuation cannot be understood using old aerospace frameworks. It behaves less like Boeing and more like a hybrid of Tesla, Amazon Web Services, and a telecom company. The moat around SpaceX is deep and multi-layered. First, there is technological integration. SpaceX designs its engines, avionics, software, satellites, and manufacturing processes internally. This speed of iteration is unmatched in the aerospace industry. Second, there is cost leadership. Reusability is not a feature, it is a structural advantage that compounds over time. Third, there is launch cadence. SpaceX launches more rockets than the rest of the world combined. That experience creates a data advantage that competitors simply cannot replicate quickly. Fourth, there is regulatory and institutional trust. NASA and the U.S. government rely on SpaceX for critical missions. This creates long-term contracts and high switching costs. Fifth, there is vision. SpaceX is not optimizing for quarterly profits. It is optimizing for scale, learning, and dominance in a market that barely exists yet. The culture inside SpaceX reflects this. It is intense, demanding, and unforgiving. Employees work long hours under extreme pressure. Mistakes are not tolerated, but learning is rewarded. The organization values first principles thinking over hierarchy and tradition. Musk's management style is controversial, but effective in this context. He forces teams to question assumptions, strip systems down to fundamentals, and rebuild them cheaper and faster. This culture attracts a specific type of talent. Engineers who want to work on the hardest problems in the world and are willing to sacrifice comfort for impact. Financially, SpaceX is stronger than most people realize. Launch services generate steady cash flow. Starlink is scaling rapidly and moving toward profitability as satellite density improves and customer acquisition costs decline. Internal stock pricing reportedly values shares at over $400, implying an overall valuation approaching $800 billion. Musk himself has expressed a desire to push that valuation toward $1.5 trillion. If SpaceX were to go public at those levels, it would likely become the largest IPO in history. But valuation alone does not tell the full story. The true question is whether SpaceX has a margin of safety. From a traditional value investing perspective, SpaceX appears expensive. Its earnings are reinvested aggressively. Its future depends on execution in frontier markets like global internet coverage, lunar logistics, and eventually Mars transport. Musk himself has expressed a desire to push that valuation toward $1.5 trillion. If SpaceX were to go public at those levels, it would likely become the largest IPO in history. But valuation alone does not tell the full story. The true question is whether SpaceX has a margin of safety. From a traditional value investing perspective, SpaceX appears expensive. Its earnings are reinvested aggressively. Its future depends on execution in frontier markets like global internet coverage, lunar logistics, and eventually Mars transport. But from a long-term innovation perspective, SpaceX owns options on multiple trillion-dollar markets: orbital logistics, satellite broadband, government defense infrastructure, space-based manufacturing, interplanetary transport. Few companies in history have held such asymmetric optionality. If SpaceX succeeds even partially, the upside is enormous. If it fails, it still retains core launch capabilities that generate real revenue. This asymmetry is why investors continue to accept high valuations. SpaceX is not just a company. It is a bet on a different trajectory for humanity. Just as Tesla accelerated the global transition to electric vehicles by making them desirable and scalable, SpaceX is forcing the world to rethink what is possible in space. Lower costs unlock new markets. New markets attract new capital. New capital accelerates innovation. That is how industries are born. If SpaceX eventually goes public, it will not just reshape portfolios, it will reshape expectations. The question is no longer whether humanity can afford to expand beyond Earth. The question is how fast. And SpaceX, quietly and relentlessly, is setting the pace. The most misunderstood part of SpaceX is not its rockets. It is its time horizon. Traditional aerospace companies plan projects that span decades, but they operate with bureaucratic inertia. Tech companies move fast, but usually within digital boundaries. SpaceX is attempting something rarer, applying Silicon Valley iteration speed to physical reality. This is why Starship matters more than any single rocket that came before it. Starship is not just a launch vehicle. It is an economic engine disguised as a spacecraft. Fully reusable, massive payload capacity, rapid turnaround. Designed not for occasional launches, but for industrial-scale operations. If Falcon 9 lowered the cost of reaching orbit, Starship is designed to collapse it. The implications are staggering. With Starship, SpaceX aims to reduce launch costs by an order of magnitude again. That changes the equation for everything that depends on mass in orbit. Space stations, satellite megaconstellations, lunar bases, deep space missions. Even concepts that currently sound like science fiction begin to look financially plausible. This is where SpaceX's long-term profitability becomes clearer. Lower launch costs increase internal efficiency. SpaceX launches its own satellites cheaper than anyone else. That directly improves Starlink margins. Every iteration of Starship compounds this advantage. Starlink itself deserves deeper attention because it is the bridge between SpaceX as a visionary company and SpaceX as a cash-generating enterprise. Global internet access has always been limited by geography and infrastructure. Fiber is expensive. Mobile networks struggle in low-density regions. Traditional satellites suffer from high latency. Starlink changes the physics of connectivity. By operating in low Earth orbit, Starlink delivers low-latency broadband that rivals terrestrial networks. For remote regions, maritime operations, aviation, defense, and disaster recovery, it is often the best option available. But the real power of Starlink is not access. It is control. SpaceX controls deployment, maintenance, upgrades, pricing, and coverage. There is no dependency on third-party launch providers, no reliance on aging satellites for decades-long lifespans. Starlink satellites are replaced continuously, improving performance and reducing technological risk. This turns Starlink into a living network rather than a static asset. Financially, this model behaves more like a subscription-based technology platform than a traditional telecom provider. Monthly recurring revenue, high customer lifetime value, declining marginal costs as scale increases. As adoption grows, Starlink becomes not just a revenue stream, but a stabilizer for SpaceX's overall financial structure. Launch services are cyclical and contract-based. Starlink smooths cash flow and increases predictability. This is critical for valuation. Investors are willing to pay higher multiples for recurring revenue with long-term growth potential. Starlink pushes SpaceX closer to that profile. At the same time, SpaceX continues to deepen its institutional relationships. NASA relies on SpaceX for crew transport, cargo resupply, lunar landers, and future deep space missions. The U.S. Department of Defense uses SpaceX for secure launches and communications. These relationships are not easily replaced. They form an invisible moat. Switching costs are not just financial. They are operational, political, and strategic. Once a government entrusts human lives and national security to a provider, reliability becomes more important than price. SpaceX has already crossed that trust threshold. This creates a feedback loop. More missions lead to more experience. More experience leads to higher reliability. Higher reliability leads to more contracts. Competitors struggle to break in not because they lack intelligence, but because they lack iteration volume. Culture amplifies this advantage. SpaceX operates with an internal belief that most problems are solvable if stripped to first principles. Engineers are encouraged to question suppliers, redesign components, and eliminate unnecessary complexity. This mindset explains why SpaceX manufactures parts that others outsource and why it writes software that others buy. Vertical integration is not ideology. It is a weapon. It allows SpaceX to move faster, learn faster, and fail faster. Failures are not hidden. They are analyzed, absorbed, and corrected. This tolerance for visible failure is uncomfortable for outsiders, but it accelerates progress. From an investment perspective, this culture reduces long-term execution risk even as it increases short-term volatility. Short-term setbacks are inevitable. Explosions happen, schedules slip, headlines turn negative, but the underlying trajectory remains intact. This is where comparisons to Tesla become unavoidable. Tesla was dismissed for years as overvalued, unprofitable, and unrealistic. Critics focused on near-term losses while missing the structural transformation underway. SpaceX sits at a similar inflection point. Traditional valuation models struggle with companies that are actively creating new markets. Discounted cash flow analysis depends on assumptions. When the future is being invented, assumptions break down. The correct question is not whether SpaceX is expensive today, it is whether SpaceX is indispensable tomorrow. Consider the strategic landscape. Global competition in space is intensifying. Nations view orbital dominance as essential infrastructure. Commercial demand for satellite services is growing. Defense applications are expanding. Lunar and planetary exploration are returning to relevance. SpaceX is positioned at the center of all these trends. If SpaceX reaches a valuation of $1 trillion or more, it will not be because of hype. It will be because it owns critical infrastructure that underpins multiple industries. And this is where Elon Musk's personal ambition intersects with corporate strategy. Musk has stated that his ultimate goal is to enable life beyond Earth. That vision requires enormous capital. It requires scale. It requires public markets. A SpaceX IPO would not be an exit. It would be a financing event. Public markets provide liquidity, capital, and legitimacy. They also impose scrutiny. Musk understands this trade-off. That is why timing matters. Going public too early risks mispricing and pressure to optimize for quarterly results. Going public too late risks limiting growth opportunities. The internal valuation of over $800 billion suggests SpaceX believes it is approaching that window. At a valuation of $1.5 trillion, Musk himself could become the first individual whose net worth approaches $1 trillion. But that is a side effect, not the objective. The objective is scale. The margin of safety for investors lies not in short-term earnings, but in strategic positioning. SpaceX controls launch capacity. It controls orbital infrastructure. It controls a growing communications network. It controls the pathway to deeper space. Few companies in history have held such leverage over the future. That does not guarantee success, but it shifts the odds. If SpaceX succeeds, it reshapes how humanity interacts with space. If it partially succeeds, it still becomes one of the most valuable infrastructure companies ever built. If it fails, it leaves behind technologies and capabilities that redefine the industry. That asymmetry is rare. It is why SpaceX inspires devotion, skepticism, and fascination in equal measure. And it is why, when historians look back at the early 21st century, SpaceX will not be remembered as just another startup. It will be remembered as the company that turned space from a destination into an industry. What truly separates SpaceX from every aerospace company before it is not ambition. It is inevitability. Most companies operate within existing demand. They fight for market share. They optimize within constraints. SpaceX does something fundamentally different. It manufactures demand by changing cost structures. Before SpaceX, the question was who could afford to go to space. After SpaceX, the question becomes who cannot afford to stay out of space. This shift is subtle, but it changes everything. When launch costs fall far enough, entire categories of business appear. Companies that once could not justify orbital deployment suddenly find space economically rational. Research institutions, startups, defense contractors, climate monitoring firms, agricultural analytics platforms, and global logistics providers all become potential customers. SpaceX does not need to predict these customers in advance. It only needs to keep lowering costs. Starship is designed to do exactly that. Starship's real breakthrough is not size or power, it is frequency. Rapid reuse allows SpaceX to think in terms of daily or even multiple daily launches. This reframes spaceflight from a rare event into a routine operation. Routine operations change psychology. Once something becomes routine, it becomes infrastructure. Infrastructure attracts capital because it underpins everything else. This is why comparing SpaceX to legacy aerospace firms misses the point. Boeing sells airplanes. Airbus sells airplanes. Lockheed Martin sells defense systems. SpaceX sells orbital capacity. That capacity is fungible, scalable, and expandable. It is not limited to one application or customer type. This is also why SpaceX's internal metrics differ from traditional companies. Instead of optimizing for profit per launch, SpaceX optimizes for launches per year. Instead of focusing on unit margins, it focuses on system throughput. This approach looks inefficient on spreadsheets but becomes dominant at scale. The same logic once confused investors evaluating Amazon. Losses were seen as weakness rather than investment. Scale was misinterpreted as waste. SpaceX follows a similar path, but with hardware. Another misunderstood aspect is SpaceX's relationship with governments. Many critics argue that SpaceX is dependent on government contracts. In reality, those contracts function as validation rather than dependency. NASA does not subsidize SpaceX out of charity. It buys services because SpaceX delivers better outcomes at lower cost. The commercial sector benefits from the same infrastructure. This dual-use model creates resilience. Government contracts provide baseline stability. Commercial services provide growth. Starlink provides recurring revenue. Together, they form a diversified financial base. As Starlink scales, SpaceX's reliance on external customers decreases. The company becomes its own biggest customer. That is a powerful position. It means SpaceX can justify investments that others cannot. It can launch satellites at cost. It can test vehicles aggressively. It can tolerate failures that would bankrupt competitors. This internal demand loop is one of SpaceX's strongest moats. Another moat is learning velocity. Every launch generates data. Every landing refines software. Every failure improves design. Over time, this creates an experience curve that compounds. Competitors cannot simply buy this advantage. They must earn it through repetition. But repetition requires demand, and demand requires low cost. This is why the gap widens over time instead of narrowing. From an organizational perspective, SpaceX also avoids a trap that kills many innovative companies: premature optimization. SpaceX accepts inefficiency early to unlock efficiency later. It accepts chaos to enable speed. It accepts pressure to maintain urgency. This culture is difficult to sustain. It leads to burnout. It creates internal friction. But it also produces results. The question investors often ask is whether this culture can survive without Elon Musk. The honest answer is that SpaceX without Musk would be a different company. Not necessarily a worse one, but a slower one. Musk's role is not day-to-day management. It is constraint removal. He acts as a forcing function. He compresses timelines. He eliminates excuses. This creates discomfort, but it also accelerates decision-making. Over time, SpaceX has institutionalized many of these behaviors. Processes have improved, leadership layers have matured, but the core philosophy remains intact. That philosophy is essential for executing projects like Starship. Starship is not a normal development program. It is iterative destruction. Prototypes are built, tested, destroyed, and rebuilt rapidly. Each failure teaches something new. This approach would be unacceptable in traditional aerospace environments. At SpaceX, it is expected. This is why Starship progresses at a pace that surprises even its supporters. From a valuation standpoint, Starship introduces a non-linear upside. If Starship works as intended, SpaceX's cost base collapses again. That improves margins across all businesses. It enables new services. It increases capacity for Starlink. It opens the door to space-based industries. If Starship partially works, SpaceX still benefits. Even modest improvements over Falcon 9 economics would be transformative. If Starship fails entirely, SpaceX retains Falcon 9 and Falcon Heavy, which already dominate the market. This asymmetric payoff structure is crucial. It means downside risk is limited relative to upside potential. This is the core reason why investors accept high valuations. Valuation in this context is not about present earnings. It is about future optionality. SpaceX owns real options on markets that do not yet exist but are increasingly plausible. The margin of safety lies in flexibility. SpaceX can pivot launch capacity between customers. It can redirect resources internally. It can slow or accelerate projects depending on capital availability. This adaptability reduces existential risk. Of course, SpaceX is not without threats. Regulatory pressure is increasing. Orbital congestion raises concerns. Governments may impose stricter controls on satellite networks. Competition is emerging, particularly from state-backed entities. Execution risk remains high. Space is unforgiving. Accidents can reverse momentum quickly. There is also concentration risk. Starlink's success depends on sustained adoption and regulatory approval across jurisdictions. But none of these risks are unique to SpaceX. What is unique is SpaceX's ability to respond. Few companies can redesign hardware, rewrite software, negotiate with regulators, and deploy globally within months. That speed is the ultimate advantage. If SpaceX goes public, the narrative will evolve. Early public investors will focus on Starlink metrics, subscriber growth, revenue per user, margin expansion, cash flow. Later, attention will shift to Starship milestones, launch cadence, payload capacity, cost per kilogram. Eventually, the conversation will expand to entirely new revenue streams: space-based manufacturing, orbital refueling, lunar logistics, deep space transport. These markets may sound distant, but so did global satellite internet 20 years ago. The pattern repeats. Vision precedes infrastructure. Infrastructure enables commerce. Commerce attracts capital. Capital accelerates progress. SpaceX sits at the beginning of this cycle. This is why comparisons to Tesla are instructive but incomplete. Tesla transformed transportation on Earth. SpaceX is transforming access beyond Earth. The scale is larger. The timelines are longer. The risks are higher. But the rewards are unprecedented. If SpaceX reaches a valuation of $1.5 trillion, it will not be because investors lost discipline. It will be because they recognized inevitability early. And if Elon Musk becomes the first individual associated with $1 trillion net worth, it will not be because of luck. It will be because he built companies that did not compete for slices of existing markets, but created entirely new ones. SpaceX is the clearest expression of that philosophy. It is not optimized for comfort. It is optimized for the future. There is a moment in every transformative industry when the future stops being theoretical and starts becoming inevitable. For aviation, it was the first commercial jet crossing the Atlantic. For computing, it was the personal computer entering the home. For the internet, it was broadband replacing dial-up. For space, that moment belongs to SpaceX. Not because SpaceX launched rockets, but because SpaceX normalized access. Before SpaceX, space was a destination reserved for governments, prestige missions, and symbolic achievements. After SpaceX, space became a platform. Platforms do not ask for permission. They invite participation. This distinction is critical. When costs collapse, ambition expands. When barriers fall, imagination fills the gap. Entire industries appear not because someone planned them, but because the infrastructure finally made them possible. This is what SpaceX represents. It is not the story of a rocket company winning contracts. It is the story of a bottleneck being removed from human progress. The deeper you examine SpaceX, the clearer its true role becomes. SpaceX does not sell launches, it sells optionality. It gives governments the ability to respond faster. It gives companies the ability to think globally from day one. It gives researchers the ability to deploy instruments without begging for decades-long funding cycles. It gives humanity the ability to think beyond Earth without treating it as fantasy. This is why SpaceX attracts such polarized reactions. People do not argue about SpaceX because of balance sheets. They argue because SpaceX challenges assumptions that were once considered immovable, that rockets must be disposable, that spaceflight must be rare, that private companies cannot outperform governments in frontier domains. That long-term vision is incompatible with commercial success. SpaceX did not politely disagree with these ideas. It dismantled them, and it did so not through marketing, but through repetition, launch after launch, landing after landing, satellite after satellite. The accumulation of proof changed the conversation. At first, SpaceX was dismissed as unrealistic. Then it was called lucky. Then it was labeled subsidized. Then it was acknowledged as competitive. Now it is quietly accepted as dominant. Dominance, however, is not the endgame. Infrastructure companies are never finished. They only expand. The real significance of SpaceX will not be measured in quarterly earnings or even in valuation milestones. It will be measured in what others build on top of it. The companies that exist because launch costs fell. The services that emerge because global connectivity became universal. The industries that form because orbital logistics became routine. In that sense, SpaceX resembles the railroads of the 19th century or the electrical grid of the 20th. Those companies were controversial in their time. They were accused of monopolistic behavior, speculative excess, and reckless ambition. In hindsight, they were simply early. SpaceX is early. Its valuation, whether $800 billion or $1.5 trillion, is a reflection of expectation more than achievement. Markets are forward-looking by necessity. They price not what is, but what could reasonably become. What could SpaceX become? A global communications backbone, a logistics provider for low Earth orbit and beyond, a defense infrastructure partner, a transportation layer for lunar and planetary missions, a catalyst for industries not yet named. None of these outcomes are guaranteed, but none of them are impossible, and that is the key. The margin of SpaceX does not lie in conservative forecasts. It lies in breadth. Even if only a fraction of its ambitions materialize, SpaceX remains transformative. This is why attempts to reduce SpaceX to a single narrative always fail. It is not just a Musk company. It is not just a space company. It is not just a technology company. It is not just an infrastructure company. It is all of them at once. And that complexity is precisely why it is misunderstood. Elon Musk's role in this story cannot be ignored, but it should also not be mythologized beyond reason. Musk did not invent rockets. He did not discover physics. He did not single-handedly build SpaceX. What he did was something rarer. He refused to accept inherited constraints. He asked why things cost what they cost. He questioned timelines others treated as fixed. He imposed urgency in environments designed to resist it. This mindset shaped SpaceX more than any single engineering decision. But SpaceX is no longer a one-man story. Thousands of engineers, technicians, operators, and managers now carry the vision forward. The systems are real. The cadence is real. The capability is real. This matters because companies that rely on individuals fade. Companies that embed philosophy endure. SpaceX has embedded its philosophy. That philosophy will be tested. Public markets are unforgiving. Regulation will tighten. Competition will intensify. Expectations will rise. If SpaceX goes public, it will face pressure to explain itself in language Wall Street understands. Subscriber growth, margins, capital expenditures, guidance. These metrics matter, but they do not tell the whole story. The risk is not that SpaceX will fail to meet expectations. The risk is that expectations will be framed too narrowly. SpaceX cannot be judged solely by the standards of mature industries because it is actively creating one. The companies that changed the world rarely looked comfortable while doing so. They looked chaotic. They looked expensive. They looked unfinished. SpaceX looks unfinished. That is not a weakness. It is a signal. A signal that the story is still being written. Decades from now, when spaceflight is routine and orbital infrastructure is invisible, people will struggle to remember a time when access to space was scarce. They will assume it was always this way. That is how successful infrastructure disappears into the background. And when historians trace the origin of that disappearance, they will arrive at a company founded in 2002 by someone who refused to accept that rockets had to be thrown away. They will not remember every explosion. They will not remember every delay. They will remember the inflection point, the moment when space stopped being a destination and became a domain. That moment belongs to SpaceX.